Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on Go EV. We love that management is splashing cash and we never shy away from a great dilution opportunity.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. I have a Ranger Dane with me today. How are you, Dane?
Good. How are you, man?
Are you in your cabin today?
Yeah, a little excursion this weekend.
Okay, that's nice.
I'm in the Great Forest, ready for the eclipse.
Yeah, you've had some stuff going on in your area of the world lately.
Yeah, it's the end of the world here.
Yeah. Now, what do you think about this Go EV? We have talked about this EV industry before, and you see a lot of these companies, they struggle with the cash, right?
Yeah, well, I feel like most of them are just young and they're burning cash, and I think the market got a little ambitious with trying to scale up a lot of these things, and Tesla being successful at it kind of made everyone think that everyone was going to kind of hop on board, and don't get me wrong, obviously it pushed things in the right direction, but I think we got a little more time here before, and there's gonna be a lot of competition in the field. I don't think in terms of renewable energy that we're quite at the point like they want to be for electric. So I just think it's going to be kind of a slower ride. But honestly, I mean, even Tesla now is starting to it's dropping in price drastically. I haven't pulled it up in my fundamentals to actually see what I would value it at, but it could be getting cheap these days. I mean, obviously, I think it's a place to be looking at least. But I think there's also like Mullen and some of these companies. Like
Nicola.
they're pretty risky to really get involved in much.
Yeah, it's hard to like pick a winner there now. Like you said, it's early still at the industry, but for sure, as the time moves on, we're gonna see who can survive here and take a bit of their market share. But right now, it's very tricky, and they all look a bit similar. Like they are always in need to raise cash, and none of them are very profitable yet. So that's why you're gonna see them probably a little bit in the intro videos and stuff like that. But this one had like a reverse split that sent the share price a lot down, and then there was rumors of even more dilution now soon. Yeah, it actually had a spike up very recently and then dropped straight down again. So hard to predict.
Yeah. Yeah, I mean, I just pulled up Tesla over to talk about it just
Soon.
because I'm curious to see what I would value it at, and I get just over 100 around now. Like, I don't think that's a crazy price to pay for it.
Yeah.
Obviously, I'd want a discount even from there. So I probably wouldn't. I probably will never see a chance to get it unless the whole market really crashes or something. But um, but it is coming back to where if you're trying to predict future growth, I'm not saying the price where it is isn't crazy. You know what I mean? Like if you put growth involved here, I could see people argue that it's worth buying right now.
Yeah. It's interesting because I looked into I don't know, I don't remember how it actually happened, but I think I was looking for stuff in Australia, and I stumbled upon some cobalt mines, and cobalt is a little bit big there in terms of other places in the world. And then I started to investigate like those types of mines, and it led me to in a lot of the African countries they have a lot of cobalt mines, and
Hmm.
when I was reading about it, then it's like China control all of this already, and the whole thing was like that can be a big huge part in the EV industry, and you know China is big there already, so they it seems like they have started to plan to have like a firm grip of that whole you know the switch.
Yeah, China, I think, is playing it pretty strategically in terms of resources. They've always kind of done that, and it's a criticism that you hear of the United States is like where typically the United States like always seems to kind of get involved in more of like the war side of things. I mean, they do obviously humanitarian aid, but China like comes in and like is like, hey, we'll build roads for you and all this, and they're like, and we'll just borrow some cobalt from you.
Yeah,
And then they get
yeah,
rights to the mine, and it kind of it obviously benefits the nation, but at the same time too, China's getting something out of it. So it's all very strategic. From what I can tell.
yeah. There's there's a lot of you know documentaries and videos about how they have taken control in on the African continent. Like you say, they build roads, they build super big important buildings and stuff like that. So um, they and it's not like at least here where I live, we don't see it that often in the news. It is in the news, but it's not like a big focus on how they are working. You know?
Right. Yeah, we'll see how it all turns out. But
Yeah. By the way, there's I don't remember if it's I don't think it's China. It might be North Korea. Uh, I think it's North Korea. But they do similar things in on the African continent. But there's a documentary about a Danish chef, I think he is, who more or less on his own. It's a fantastic documentary, and it's in recent times. More
mhm.
or less on his own, he infiltrated this this you know some kind of party in Europe that were um, supporting North Korea, and he managed to get like pretty high in the hierarchy there and acted like a spy, you know, for more or less on his own, like just a normal person. I don't remember the name. I could dig more into it. But then the reason I thought about
Probably
that now
bored.
is that they started to talk about how they are helping China, and I mean building things in the African countries and stuff like that.
Yeah, I mean, and to be honest, I mean, you look around the world. I'm sure you could argue parts of South America are underdeveloped as well, but Africa is one of the last real places I think that like it's just taking longer for like really real economic growth to occur. But I think there's going to be a point in Africa where it like hits just kind of like a mark, and um, you're going to see some really like great things come out of Africa. I just think it's taking time, and I think it's history related for a lot of things.
Yeah,
Um, yeah, but as we get into the future, there's a lot of untapped potential in Africa.
yeah,
And I know Africa, like I've watched like a few documentaries or whatever, and part of the issue with Africa is always that they don't really have great ports. Like the way the continent's shaped, like there's not great ports. So that's
Yeah.
always been a big issue with the country, is being able to transport stuff in and out of it,
Yeah. Yeah.
which, it does
Or
have pretty wild geography if you.
yeah. All right. EV market
Yeah,
takes
we're
you
all over here.
places. Um.
No, like I said, my whole point of all that though is just I think that market's very interesting. I definitely think it's
Yeah.
worth looking into things, even in some of these crazier plays.
Yeah. And it's gonna come. It's forcing itself to come here, and you will probably we make the intro video. We have talked about them before. It's just for fun, but maybe one of these that we have mentioned is gonna end up being pretty successful anyways, but it just looks a little bit bad now. It's hard to say these things.
Yeah, for sure.
So interesting week though. I saw BNED is it ended around 72 cents, I think, just below 72 cents. And I mean, we have talked about before, like the price action right now. It's nice to see when it goes up, of course, but it's just a little bit of a noise before the news, don't you think?
Yeah, I mean, I think with this kind of price action, like at this point where it's at, I think you'd be insane to try and short it, because if you're wrong, you could blow up a portfolio really easily. Because if it becomes like a 4 or 5 bagger in like a week, like you could really get killed on a short position. So I actually think the trickle up is just that there's slowly more and more information. It is a really small cap company. Most people aren't looking at BNED. So
Yeah,
I think that some of this trickle up that you're seeing is slowly investors are starting to put just a little bit into it, because same thing. Otherwise, if you're right on the long side, you could potentially gain a lot. So I think at this point too, knowing that the catalyst really now is Wednesday. I mean, at this point, we all know Wednesday's probably the day. I wouldn't
yeah,
be surprised that they would wait this long. Who knows? It could all depend totally on where they're in their contract negotiations.
yeah,
I think I still remain bullish just on the fact that when we talked about what a merger or a sale would look like with BNED because of the contracts, we knew it would be very complicated, and we knew they probably have a lot going on there. I mean, the Bears obviously are going to argue that they're probably stressed and they're trying to find anything, and it's just taking a while. But I don't know. I'm still confused on why you would argue that they would declare bankruptcy right now, like when you
no,
don't
I
have to worry
agree.
about till December. It doesn't make any sense. So I
No,
don't think it's that. I think it's more just they're trying to get themselves in the best position and get the best deal possible. So they're taking as much time as they can to make sure they get that best deal.
yeah. Um, and we have discussed before now all the different paths this can go, and it's just now, like we have also said in the last week, we are just waiting now for something to happen, and it can come any day. But I agree with you. Like in my head right now, I'm also thinking that it will last all the way till 10th, till Wednesday. Um, and if something happens before that, okay, good. But in my mind, I'm a bit set on that date, I think.
Yeah, the yesterday was the only other day I thought maybe they would, had something finished by the end of the week. And when I didn't see any news kind of after the market closed, I'm like, yeah, this is going to go right down to the wire here. They're going to whatever they're working on, they want to make sure that they're using as much time as they could possibly need. So,
Yeah.
we'll see.
It's just in my head also, it would be so weird to do all of this and then on Wednesday, for example, say like, oh no, we're going bankrupt. That doesn't make so much sense to me in my head, at least.
Yeah, and obviously another huge risk is it could be that they're working on something, and they can't get enough capital, so they are going to have to issue shares. So
Yeah,
that's definitely something to take into consideration, is that there could be possible, which, anybody who's not getting in it right now, I can understand, because you can offset some of the risk. Obviously, you don't get some of the return, but if they do dilute shareholders, which my argument against the dilution is that, you know, with the share price being at 70 some cents, if you offer shares, that'd probably drive the price down, and then you're only going to get so much. Like, you're going to have to really dilute shareholders, which I don't know, maybe that's is what it is. You know, it depends if the creditors kind of force them into that, but I don't know. But
No, I mean they were
I
clear about that in the document that that was a possibility. So
Yes, and it did
yeah,
say substantial share dilution, which is I know why a bunch of the bears kind of initially hopped on and started saying that, you know, this is really bad, like don't go into this.
yeah,
And you know, I'm not saying that they don't have an argument. I just don't see it. I don't see
yeah.
the share dilution being any kind of beneficial amount of money that would make any sense for the business to take that route. If anything, I still think I'm surprised they haven't offered preferred shares. I think preferred shares, if they restructured with preferred, especially if they offered like a huge chunk of that to Bank of America, that's that's a much better way of like kind of giving them something that has value, locking them in for the long term, and it could return more than just like the general interest, you know, like because you know, if the preferreds don't perform all that well in the long run, they can sell those off. Like they're going to hold most of their par value, and we all know the business is inflecting at this point, which is, I mean, that's the big thing. I don't know why you would push for bankruptcy when you have a business that's successfully turning around, like obviously
No,
turning around.
just a little bit more patient, and they will get the money anyways.
Right. And
Yeah,
that's always been my bull argument the whole time is as a creditor, if I was looking at this, and I saw this turnaround occurring, and then I saw what the Department of Education had decided, as well as the way it's written for future, in the case that they do change the legislation, um, I would totally give this a longer runway just to see how it plays out, because there's a real chance you're going to get even more money back.
yeah. And in the near future, actually in the near future also. Okay, it will take a little
Right.
bit longer time, but it's not like this will be 10 years in the future, you know.
Right.
So yeah, no, we're still waiting there, and I don't know. Is it so much more to say about BNED at this point?
I mean, not exactly. We can look and see if you know, if there's anything that people are talking about. But the problem is like there's not much to say, because at this point speculation is just that, it's
Yeah,
speculation.
yeah.
And
And
um
I'm, I mean, also it can end up being multiple solutions at the same time, I guess.
yeah, I mean, they have such a they have a very veteran staff on their board and their management team in terms of handling strategic alternatives like this, especially with like possible going concerns and things like that. So I wouldn't be surprised if they come out and they say, we're going to offer some shares, and we're going to offer preferred, and we're going to restructure this debt at this percentage.
Yeah,
You know what I mean? Like it could be some crazy thing they came up with and everyone agrees on. And that way it doesn't really hit anybody all that hard. It doesn't hit the business that hard. It generates the money they need. And going into the future, they'll be in a much better standing.
yeah,
And and then I also think too, with them being at the price they're at market cap wise, I'm sure there's a lot of eyes on it, because there's a lot of people who would benefit from owning those contracts. So
yeah,
I still think that's a huge possibility, which is rare. That like we've always said, we don't really look for, you know, merger acquisition type. We don't expect that as the thesis. Maybe if there's news about it, sure, then we'll start to take it seriously. But just to speculate if they're going to do it, that's pretty rare that you and I do that.
yeah.
So
It's too hard to predict those things, but here there's a very clear case about how that can be, how that can end up being an option.
yeah, it is definitely a possibility. So
Yeah, and I'm sure they also have. I'm just curious about those BLCM and private investor, how they were discovering these contracts and stuff like that. I'm just curious. Like it would be so interesting to get a little bit of knowledge about what's going on actually, just for learning purposes, you know.
well, no, I mean, I talk quite a bit with private, and he's just very meticulous. He was telling me, he's like, hey, you know, as smaller investors, our edge is from our attention to detail. So he's
Yeah,
like, because I told him, I was like, one of the things I've learned from you and I really respect from both of those guys is their ability to fine tooth comb through like the 10K and the 10Qs and really like break down, because there'll be parts where, I feel like as an amateur investor, you'd probably skim over, and there might be a line or two in there that really is important the way it's written. And,
Yeah.
that obviously comes with experience to notice those things. But
Like the
it definitely makes
mandatory
me as I read
sentence.
through. Sorry, what'd you say?
No, like the mandatory sentence in the document, it was already there from the beginning, but everyone skipped over it.
Right. Right. And that's another I mean, that's even just in, the Department of Education part. And my problem is I just didn't watch that second video because I didn't realize that they
Yeah,
would bring it back up in that one.
yeah,
So that was just me. That was just
yeah.
my bad. But
No,
good
but the,
for, good on BLCM to sit there and like listen to even more. And same thing later on, I started listening past where they talked about the cash management and into other sections just to make sure they weren't mentioning anything important.
yeah, I know. Yeah. And we have talked actually about that before. Like our strategy is a bit more quick, and sure, we because of that and because of the amount of tickers that we go through, we definitely miss stuff, and that's part of our strategy. We are good with it, but when we start to dive into and take a big position, for us personally, like we have here, we spend way more time on this company than we do in a smaller position, I guess.
Yeah, and it's one of those things too that like you just start to learn where to put your attention. You know what I mean?
Yeah,
Like you only have so much time, and you can only your brain can only hold so much knowledge here. So
yeah,
um the ability to sit there and sift through and make sure that you're making the best use of your time, that's the most important thing.
yeah. And that's also where the sheets come in handy, and all the we talk about that. We constantly test and tweak things with the sheets, and this is actually why we do that, to make it more efficient and help us like just catch our attention when stuff happens
Right.
early, you know.
But yeah, so we'll see going forward.
Yeah.
But
uh,
I mean, we were joking around on the past few streams saying we're down to the countdown here. Well, now we really are. We really have 3 days.
yeah,
There is no further extensions or anything like that. We will know on Wednesday what's going on by the
yeah,
latest.
yeah. And I mean, it's exciting. I just hope
It is. It is.
I hope we will get out on the other side with something to smile about.
It's actually nice on the weekend. I don't feel like I need to sit there and stare at anything.
Yeah, yeah. And I said on my last stream, I made it was a small purchase on BNED again this week. That's probably my last one if nothing fancy happens before Wednesday.
Mhm.
So I kind of placed my bet now, and it will go the way it goes. So
Yeah, I mean, that's at this point, like we said too. It's calculating your own risk and how much you want to put into that. Um,
yeah,
but we're at that last part here.
yeah. I have been thinking though, because I sold out of GTE to get into BNED when it was dropping. So far,
Mhm.
stupid decision. Have you checked out GTE?
Yes, GT is doing very well. I
Up
have a
to eight
position in
dollars.
GTE.
Huh?
I have a position in GTE.
You have one, yeah. I sold
Yes.
completely out, and obviously right now looks like a mistake, but it all
I
depends
thought after
on.
that last I actually had bought right after the that last filing, because that was always my thing with GTE is I was like, this is on paper such a good company, and I feel like management's always doing like they're working hard to like make, and I know there's just the Columbia risk, but what do you call it? After they're like, we're doing buybacks, we're doing
Yeah,
all these things, and I'm like, all right, I'm buying again. Like these
yeah,
guys are there's you cannot argue that that company has not got great management and that they're
No.
doing everything they can. The price of oil is up, you know, so there's just a lot going on there that interests me.
Yeah. So anyone who jumped into GT and has had this gain is congratulations. And you know, um, me selling out is more like a personal thing because I couldn't raise money in any other way. So that's just like you have to prioritize the portfolio sometimes. But
Mhm.
let's check out. Maybe I'm not gonna regret in the end here. But GT, my point was I liked GT. I didn't want to sell out, but I kind of have had to. And I didn't sell out because I didn't like the company. I actually felt very bad when I had to sell because I've been in them for a while as well, and I knew a lot about the thesis and the share buybacks. It was so transparent also, and you had Starbucks updating you on everything also. We have pulled them up on many streams actually before, so for anyone who has watched the streams, you're well familiar with the GTE by now. And yeah, it looks like
Yeah, they're a
Starbucks
great company,
once
you
again
know.
get this one right.
And I'm pretty sure Stables has said that's like his largest position, so
Yeah,
he's
he
done very
has.
well, I'm
Yeah,
sure,
yeah,
on this.
yeah. And
So good for him.
I I made a little bit of money, but of course it would be nice to hold up till 8. And I'm thinking it can go higher even. My thinking
I
was
was gonna
always
say,
10 for this.
yeah, I was just gonna say, I'm like, I'm pretty sure last time I valued it, I got around $10.
Yeah,
So, um,
yeah, I think
and you
so.
know, I just said, you know, my calculation doesn't take in the risk rates from other countries. So I was like, yeah, that's probably why there's like a substantial discount. But to say that there's like a 50% discount because of um like I don't think the risk there is that high, you know.
No,
And I know part of it was because of politics and people arguing that the government wasn't going to support the company, um, because of their one president, but I think he got removed or something too. So that was going on for a while too. So that was a separate issue. But
yeah, but they kind of overcome that. And then it dropped on the news that they were doing this one, the 100 million senior notes, out of nowhere. It surprised the market a bit, I think, and then it dropped a little bit after that. And um, you know, we wondered a bit. I remember we talked about it on stream, like what they were going to use this for. But since I sold out, I haven't tracked them as closely. I just have tracked the price, not the story. So I'm not fully up to date of how that has gone. But obviously, it's getting close to a double from where I entered. So
yeah, I honestly, the way you know, when I look back on it too, you know, it's a company that capex expenditures can drastically increase future returns.
yeah,
So I think they probably just did a calculation on leverage and found, you know, they'd benefit from, you know, getting some extra cash and putting that in, which would drive earnings. And then from there, shareholders would benefit.
yeah,
So, I mean, that's really what you're supposed to do, you know, as a public company is if you take on debt, it's supposed to drive earnings, which would then benefit shareholders, you know, and that's why
yeah,
the argument for you, why you take on the debt.
yeah,
So, that's my guess, and I think the market's, you know, like I said, management's doing all these really great things, and they're just making sure that their liquidity is high, and they are rewarding shareholders right now. So I think even with the debt being take on, if you're going to take debt on, but then you're going to do all these things to benefit shareholders, like pay dividend, buy shares back, especially when it's pretty arguably, you know, one of the cheaper companies out there.
yeah.
That's a good time to buy shares back. So I think management's doing all the right things there.
Yeah, I agree. I was never worried about this news when that came out. But
Yeah, I was slightly at the time, but
yeah,
you know,
it
and
led because
I think it
it
kind of
didn't
blew
come
over.
with so much information, and it led to a price drop for sure.
Right.
Yeah,
Yeah, and I remember I said they were interesting on that price drop, but I didn't pull the
yeah,
trigger then. I wish I would have.
no,
I waited a
yeah,
little bit, which is whatever. It's fine.
yeah. But it's interesting though, because if for our portfolios, that was around the same time where you started to get like a good opportunity in BNED. So it was a bit like, where should I put my money?
Yeah,
So
and part of it with me too is just BNED for me is such a large position now too that I did want to take some other companies on just because it's tough to be in just one name so heavily, and then you
yeah,
feel like you're just kind of waiting for, and there's all these other things going on. So
yeah,
it's nice to have a little liquidity where you can enter some of these other positions that interest you.
yeah. That's where I um but everyone has their own situation, right? But that's where I wish I had more cash free to take the opportunities when I see them. And right now I don't have that luxury. And but it's all good. I also wanted to say that the 10th is on Wednesday with BNED, and I think the last short information was 15 of March, so we're gonna probably get an update on the short interest straight after Wednesday there.
Yeah, I mean, at that point, if you're short now,
Yeah,
I give you a lot of credit because I mean, maybe if you shorted a long time ago and you've been holding it, but I would think if I was a short, this would probably be my chance to get out,
yeah,
because you don't know what's going to happen here. And if you've called it
no,
so far and watched BNED kind of trickle down over time because it's just kind of gotten to this tough spot, you called it right. And from here on, why take the risk? Just get your short position, collect your earnings, and get out. So,
yeah. But
um,
we do know there has
I
been
mean, it
some,
all depends on the size, but of your position at least. But
yeah. No, but we do know there has been some shorting of the stock after the Q3 got postponed. Uh, there has been talks about it.
yeah, but anyone that said that they did it, it was small positions,
Yeah, it was small.
and
Yeah,
I remember Henrik was saying that he was shorting it, which I feel like that guy shorts everything. But
yeah, and he was quick out again too.
yeah, because I know like another one that he's been talking about shorting was Rig, and Rig's
Yeah,
been doing well, so
yeah,
that was a bad call on his part. So
yeah,
I don't know, it's tough to say, but
yeah. Yeah, there's still no news, Stain. I'm checking BNED here.
no news.
We can jump into. You want to go through the dashboard first, or straight into the fundamentals today?
Yeah, we can. Why not?
Dashboard.
Yeah, let's do the dashboard.
Um, you see,
You're talking about
gold
gold.
miners
Gold's all
has
up.
yeah, gold miners are a bit up, and I see some talks about it in like various channels about gold and copper. Um, So we have searched a little bit for good gold coin. We found that one with the accident in Turkey that may have led to like opportunity, but I put them in the tracker and I haven't prioritized them too much after that. There's a
I mean,
there's a
gold
bit
looks
too
good
much
right now.
uncertainty. Sorry?
I said gold looks good. You looked at that
Yeah, it
chart.
does look good. Yeah, yeah,
I mean, they're breaking all-time highs. So,
yeah,
which I think part of that too is just I know some people argue it's not, but I do think part of it's inflation. I think um like, if we have all this inflation, how does the value of gold not slowly keep trickling up? Like
yeah,
gold is gold. Like,
yeah,
you know what I mean?
yeah,
It
good
should
for
it
sure.
should slowly start to appreciate.
Yeah, you kind of see both the recent clients is like from October, and then October 22 started to climb, and then again October 23 it started to climb again. So it's an interesting chart for sure, and it's yeah,
Yeah, I
it's a good
see.
chart.
It is a good chart.
Yeah.
Uh, Coco is about to break 10,000. See that? Or it did break 10,000. It did break 10,000. Holy.
I actually saw that there was something going on in Africa that started to that led to this madness in cocoa. Like there was some
Yeah,
harvest gone wrong or something like that.
Yeah, I was reading up on it, and they said that only like 15 to 20% of the world's climate is livable for cocoa trees.
Yeah,
So they had, I don't know if it's they're arguing it's climate change or what, but they had a really rough harvest. And because it's such a narrow bend or band of the world that can actually have the trees, that whole area had a really poor harvest. So all of a sudden, there's just no cocoa.
yeah.
So, it's pretty wild. But yeah, this thing's turned into from the year. I mean, that we're up 3 times. It's a
Yeah,
three bagger.
I think I'm not sure
From
how
two
many
years, it's
people
a
would.
five bagger.
I don't know how many people that would see that coming in 2024.
It's a good call. Good
Yeah,
call.
yeah,
No, it's one of those things that, unless you're in the like if you're a real commodity expert and you've been following and you saw that the harvest was going to be rough. I mean, you know, but that's
yeah,
why that's why, these guys have specialists in all these different areas. So when you're the expert on something like this, if you watch that, there's an issue going on, it makes good sense that it's going to do real well.
yeah. I just pull up the Tesla chart here. We talked about it in our intro here, and you said you got a valuation around 100, didn't you?
Yeah, that's about where I value it at right now. But like I
Yeah.
said, I don't really take into projection like future growth.
No.
So obviously it's Tesla's been around for a long time, but there's a long runway for Tesla. So if you were going to do like a real discounted cash flow, you'd have to put in some kind of terminal value and figure out over time what it'd be worth. So you
Yeah.
could easily argue that it's worth more than this. I mean, if you want to use like a peg ratio or something like that. But
Yeah. I saw it was down again 3.5% on Friday, but not too much. Not too much here in the dashboard. It's interesting to see the gold and silver mines doing well in the last time. I'm keeping a loose eye on that. Um, but BNED first.
yeah, have you had any
B,
companies mining wise that you've been interested in?
no, I tried to look and I haven't really found anything that is. I have of course a few in the tracker, um, but it's a combination of, like I said, with my I don't have cash to spend right now, um, and lack of companies that I've thought will do well. But the probably the ones that is most interesting was the one we checked out with the accident in Turkey.
Oh,
Um,
SSRM.
yeah,
Yeah, no, that
because
was
there
interesting.
you had an extra catalyst that made it drop, but there's just a lot of uncertainty of what's going on there. So I think that just needs a little bit time to stabilize and stuff. But that might be one that I'm keeping a closer eye on. What about you?
As now that you mentioned it, SSRM was the one that caught my eye for sure.
Yeah.
Just because I think there's a real road to recovery there.
Yeah,
Um,
I also think they will push through that one.
yeah, I'm starting to the more I get through investing here too, I'm starting to see that some of these smaller ideas, I'm contemplating on just putting small percents into some of these things because to be honest, like I think the argument that in the long run, the upside's worth holding on to some of those things, especially when they get cheap, is there, and yeah, it might not be like a BNED type play where I think it's going to be like this crazy multi-bagger, but if you can edge out a few extra percent here and there instead of having capital sit around or whatnot, and as you need it, you can pull it out of those things or whatnot as
Yeah,
they appreciate. And if they do, if something does go wrong, you're not following it super closely. It's not the end of the world. You're not gonna. The idea would be if you had a small mix of those, um, that they would outperform your losers. I mean,
yeah.
that's everything, but
No, but I agree. I think that would be a smart way to do it if you. But I need to like put set my portfolio properly yet, and I'm still working on that.
yeah,
So
my issue is just the time. I like to I like to spend a little more time in my ideas before I really delve into things. So, um, I don't want to get ahead of myself and then feel like I can't keep up with too many companies because I
Yeah,
definitely felt that way when I initially started investing, which is kind of what led me more to this concentrated strategy,
yeah.
which on top of everything's been working very well. So um, I guess I should just consider it a win. Maybe it's just this last week waiting for BNED news when you thought you should have it. It's driving me
Yeah.
nuts.
But it's interesting though how different views people have or investors have on what's good for a portfolio. There's so many different strategies there, as well as actually strategies for actually investing. But
Yeah, I
portfolio
mean, there's been
management,
a lot of people. Yeah, portfolio management's huge, and there's a lot of people who have always said, it's whatever strategy works for you, as long as you're able to replicate it and keep doing it successfully, that's fine.
yeah,
Who cares?
that's the one. Yeah. And I know Roaring Kitty talked about it. Like when he started to stream, he had a ton of positions, and he explained it many times that that's not normal for him. But at the time, he kind of liked it. But everything went up then, so of course he liked it back then. But I'm
Well,
sure
that's part of buying
he,
at the bottom.
huh?
I said that's buying at the bottom.
Yeah,
He
yeah,
bought in at a good time. I mean,
yeah,
you could have argued that he took on a substantial amount of risk just on the fact that but I guess I'm trying to think back. I think he bought a lot of stuff like right as the government came out and started saying that they were going to start to kind of provide financial aid all over the place. And the markets just took that as such bullish news that even if you got it on the first days that all started spiking back from the bottoms, I mean, you're talking multi-baggers on almost every one of those,
yeah. He
especially high risk stuff.
when he goes through his positions and the charts, there's very often the same time period where he said he entered, and he timed it like perfect. And I know people on Reddit and stuff have taken screenshot of his portfolio and see the performance like a couple of years later, and they are doing really well. But he's a fantastic investor, but it was different times back then. You might never get those chances again. And he said that sometimes he just used his portfolio because it was so big. Like that's the only thing he needed for screening and stuff like that. Just trim positions, add positions.
Right. Well, I mean, when you've done that's part of the whole purpose of screening is like, if you've looked at all these things too, you can glance at them and it takes you a third of the amount of time to get
Yeah,
caught up. You know what I mean?
yeah. And it was interesting to see, and that comes with experience, I guess. But he could tell you what happened like 10 years ago because he was involved in them just by looking at the chart. So you could just tell that he had a fantastic overview of everything that he was talking about there.
No, and it's important. I think that's why the experience is kind of, it is funny because, you know, uh when he talked about his confidence in things, and you hear this from a lot of investors really, but it does just become this thing where like you just kind of know what the market's thinking, you kind of know what the company's doing, and you can just kind of start to see it like as something starts to unravel. Like you
Yeah,
can just start to predict, be like, yeah, this is going to work, or that's bad, like stay
yeah,
away from that, those kind of things. Like you just kind of get those feelings the more you do it with,
yeah,
and then it's only a matter of time before you start becoming successful.
yeah, for sure. All right, moving into the fundamentals, I guess.
Yeah, just let me know what ticker you want to do at a time, and then I only
Maybe
pulled in a few. If you want to look at some of the after you go through yours, I can tell you which ones I got.
yeah, you want to start with HNRJ G because I tried to do it on Thursday, but I couldn't. I didn't have enough time.
What was it?
HNRG,
Oh, I'm dyslexic. Hold on.
Palador Energy.
Yeah, I got it now.
There's been some insider buys there recently. End of
Yeah,
March.
I feel like did I look at these guys not that long ago? The name I
Yeah,
know the name, but I just can't remember the last time I looked at it.
yeah.
Oh yeah, I
And
looked at them last month,
okay.
but keep going.
Yeah, I just saw that like this 2023 for them has been a very good year, but it's still trading close to the the 52-week low. And I think they struggle a bit with the free cash flow, but they are generating operating cash flow on. I wish they could do a little bit higher, I guess. But they also had a big jump in revenue from 22 to 23.
Yeah, right.
And it's now trading at $5. If you check the chart here, it has dropped substantially in the last time, from 15 to 5.
Yeah, I'm just trying to get caught up on what's going on here.
Yeah. And they just had a CFO change.
Yeah, I see that.
There's some very negative comments here under the earning transcripts, that they are not happy with the performance of management.
Yeah, that's what I come to the conclusion of last time.
Yeah.
I thought bankruptcy is a risk on this too.
Oh yeah. Yeah, they have a lot. They don't have any cash, so maybe they need to dilute it. They have diluted in the past, like since 21. There's a small dilution at least, but a pretty big one if you look historically, because the share price has been pretty constant for many years.
Yeah.
I mean the share
Um,
count.
the one thing that is somewhat promising is the share buys by Wesley Charles,
Yeah.
one of the directors. I mean, it's a 23% increase in his position size. So
Yeah, and it's close to the 52-week low. It's like you kind of want to see those things,
right, if he's starting to if he knows the business well enough that he's buying right there.
Yeah. But what were your notes from the last time other than bankruptcy risk?
I had kind of similar stuff. I didn't write too much down specifically, but I did put, just poor fundamentals, definitely
Yeah.
poor management. I just pulling up there's like a bunch of 8Ks and stuff that have come out.
Yeah, I saw that.
I think when I looked at their last 10K, was their last 10K rough?
Yeah, it was. And this guy Cole is king. He
Mhm.
said he owned 4 million at some point, but it's completely sold out now. So he probably knows the company well and is not very happy with the latest performance, But that's
Right.
what we say though. If you maybe come in at the right, it's about the timing, right? If you come in when it
Yeah.
looks bad and they manage to turn it around, that's kind of the whole point of our strategy. But it needs some catalysts.
Yeah, and their assets are going down, their debt's growing.
Yeah.
They had a better year, but they also took on debt, so I don't know.
Yeah. No, and that's when you see other people slam management then, and you see those things, it's not really it's not a good sign probably. If people were more happy with management and they took on debt here, I wouldn't be as worried as I am with this now. You know what I mean?
Right. Yeah, and another thing too is I just think coal is a you know, especially in like America, like they are not supporting the coal industry. You know what I mean? Like
No.
they are pushing to get rid of it. So this as a commodity cyclical is fighting against, you know, everything.
Yeah. Yeah, it's a tough environment for coal. I think the ETFs and stuff like that, they have even closed the ETFs.
Right.
That's a long time ago, but they probably don't feel so welcome in that industry. Does anyone owns them now?
That's a good question. I can't remember if I had checked that. I didn't put any notes on it, so I don't think there was, but
There's this Hardy Steven guy, because I saw the insider own 13%, and that's probably him, Stephen Hardy.
yeah, those are probably all the guys there.
Yeah.
Aegis Financial Corp.
Is it B. Riley?
They own quite a bit of energy type.
Yeah. Yeah, I don't see any familiar names here that I would pay attention to.
Yeah, I saw Oak Cliff for a second. And I was like, oh, and then I'm like, nah, it's Oak Tree. That's who I
Yeah,
thought.
yeah, I did exactly the same. So they have some debt due in 26, it looks like. Um, and some in 24 as well. So they might struggle even with the short-term debt here.
Yeah, I was gonna say that the issue is they don't have a lot of liquidity, and they have quite a bit of convertible notes.
I guess you can assume a dilution here very soon.
And it seems like they keep issuing these convertible notes too. Like they just issued on August of 22 an additional 10 million in senior unsecured notes that they're paying 8% on for 2026. It says that stock has a conversion price of 615. So that wouldn't be much. It wouldn't have to go much higher for them to convert those.
Yeah.
And that's probably why you keep seeing this stock price trickle up. It's probably not that they're actually issuing shares, but they are dealing with the convertibles.
Yeah, there's a comment here, like they go from talking about being debt-free this year to paying interest on the converts in stock. What the hell has happened since the last call?
Yeah, right.
So it just seems like management here are doing a terrible job for everyone who has been involved so far, and I think that alone sometimes just put me off enough to, because this company is already struggling a bit. So if you add then terrible management, or if they are selfish and want to just get a good salary themselves, it's not a good sign at all. Even though there's a big purchase though. It's a bit conflicting, right?
Yeah, I was actually just reading through on that. They do have quite a bit of they have almost a million vesting stocks for restricted stocks that they've given out during compensation plans. So there's also possible $1 million or million share dilution from that too. So
Yeah. How much did you say?
almost a million shares
Okay.
between 24 and 25, it says. And the other thing too, that I hadn't really considered, but I was reading about in one of my books is, when a company starts to offer out um, share-based compensation, like you should really basically consider that, because if they're doing it consistently, like you should kind of like put that into your calculation, like going forward. Like if every year they hand out a few 100,000 shares, well, you should assume in the future they're going to continue to do that, so that dilution
Yeah.
will continue.
Yeah.
Which, I mean, how do you account for that? And like, you only can predict so far into the future anyway. So it's just like a thought to keep in mind, when you see
Yeah.
it.
And I remember we discussed a ticker here a while back, and we talked about the share dilution, that it wasn't so much in total, but then it was like consistently every year or two they diluted shareholders. You know what I mean? So
Right.
that's
So you
probably a
have
good
to you have to
example.
discount for that, or at
Yeah.
least, and like I said, like I don't really, the more I get into like really valuing things, like I'm not trying to build out like some fancy discounted cash flow, but like I do want to know that, like, as time goes on, when you see those type of things, know that that could lead to, you're going to lose money on that at some point. Like that takes a hit somewhere.
Yeah.
So just to keep it in mind that, like, if you're thinking on your valuation, like, does this look cheap or not? And like you want it to really look cheap. If they're doing that, that's going to start to push me in the other way where I'm like, nah, it needs to get cheaper. You know what I mean?
Yeah.
Like I don't necessarily need like a very specific number, but if I'm thinking like, it could be worth about $5, well, maybe now I think it's worth like 450 or four. You know what I mean? I'm going to discount it just on the fact that I know that.
Yeah. Yeah. No, I think I've seen enough of this, and I'm a little bit terrified of the story with the management here. So I'm not gonna add this in my tracker.
Yeah.
And by the way, though, we very often we talk about how we like insider buys, but the insider might also get it wrong. It's You should always check like where they bought, and how well they have done then. And I was looking back when this guy, he first bought at $6, then at 3, and now again at 5. So that's something I like to do, like just to check the prices they have bought in the past, and see how well they have done. Because just looking at one here is maybe a bit too simplistic. It's nice to see, yes, 240,000. That's a lot too. But he might not be a good investor even, you know.
Right, and sometimes they know that it looks good to buy, so
Yeah,
sometimes they
so
buy
they
just
just
to
throw
try
something.
and, yeah, just to make things look good. Because the other thing too, I think super important is like knowing that guy's net worth.
Yeah.
Um, because if it says the value he holds in the stocks like 240,000,
Yeah.
or that's how much his purchase was. Now,
Yeah.
to average person, a $250,000 is a lot of money, but maybe this guy's got, $500 million, and that's like nothing. You know what I mean?
Yeah.
So
That's why you see us often Google the names and try to find enough information about the person beyond just that they have done a purchase and stuff like that. Just and you can find the salaries in the D filings, right? Or the compensation
usually,
plans and stuff. Huh?
I said usually, yes.
Yeah. So that's a good
Well, yeah, I mean,
good
yes, it should always be in there, really.
yeah. So that's a good point. Like no one likes to lose money, but if he's a billionaire, 240,000 is not a lot of money for him to lose.
Right.
And then maybe the point about that it looks good for investors gets a bit stronger, you know. But even in this case, there's so many other things that I don't like that I'm not gonna even bother checking into that right now, I think.
Right. And not to assume anything, but when the guy's name is Charles Ray Wesley the Fourth, I assume he's from money.
Yeah. Yeah. I don't have that. I don't have that. I don't have a number in my name.
Just a guess.
Yeah. If you had a number in your name, which would you be? Number one or what?
Me, yeah, I'm the first with my name.
Ranger Dane 1. That's
Ranger.
you,
Yeah,
actually.
I was the first in my family named Ranger.
Yeah. Nice. All right, you want to move on to S&D? That's a company I
S&D.
already have in the tracker.
Actually, they're one of the ones I pulled up too, so that works.
Yeah. I pulled them up. I saw they were up 11% on Friday, and I just briefly checked before the stream, so I might have not just not found it, but I couldn't find some obvious news on that gain. So, but I kind of like it here a little bit at least. Do you have a share buyback from 22 to 23?
Hang on, I'm just updating mine. Make sure that's right. Yeah, okay. Looks like I do. I have definitely shares, or I went from like 45 million to 41 million. And
Yeah.
granted, mine's always rounded, but yes.
Yeah. Which is, if you look at the market cap, it's like a little bit below 100 million. It trades at 218, and that's well below book value. And they seem to be a bit levered, but well, they're gonna struggle a bit with this short-term debt, I think.
Yeah, I mean, yeah, I got to see what that actual debt is, but because the other thing too is just because they hold that excess cash as a form of liquidity, but that doesn't mean that they need to hold straight up, 26 million. You know what I mean? Like
Yeah.
that they have that money. They just don't typically like hold it. Excess cash is just cash that's sitting around that who knows, it's in, either marketable securities or literally just sitting in an account because they need to have it.
Yeah.
So it's
And they
really
have
more
some.
like I would more judge if I look at their actual operating cash flow.
Yeah. What do you
They
get
should be
there?
I have 31 million for 2023.
Okay.
Now don't get me wrong, that money's got to go to other places too. So
Yeah. No, but I was just checking the number. I have the same, roughly. Which is not too bad, I think. And what do you have for
yeah, the
free
issue
cash
though
flow?
is the issue is they spend a decent amount in capex, so the actual
Yeah,
free cash flow that they have available,
a bit smaller,
yeah.
like 1/4 of that. And capex has gone up a little bit in the last year as well. Do you have some stupid
Right.
dividend here? Because I have, my number is like 0 per share, but it's a number there, so it means that it's some kind of a dividend.
I don't have one listed on me, but maybe they offered something
Maybe like a
at some
special
point
one. Yeah.
special, or it's only for like certain like shares. Like I don't know if sometimes they have different classes and like they'll offer dividends, and
Yeah.
it's more of like a share-based compensation type idea, or
Yeah.
like not share-based but compensation.
I saw that 11 million in their latest Q report is of the current liabilities is like current portion of operating lease liabilities. So maybe the short term is much smaller than what it appears to be in the sheet.
Yeah, I'm not sure. I'm just looking at this 8K they came out with just to see if there's anything that changed.
Yeah.
But they announced fourth quarter 2023, but they don't compare it to anything. So it doesn't really matter much. So yeah, I honestly think the big thing here too is like you said, what are they going to do to cover that near term debt?
Yeah, but they do have some like property, plant, and equipment is pretty high in this company. So maybe what are people saying on seeking?
Um, hang on. And then also I'm reading here too, it says as of December 31st, we had cash on hand of 6.1 million and 12 million in undrawn availability in their existing credit facility. So they do have a credit facility if they need be to draw 12 million from.
Yeah. Okay.
So that puts them at 18. And
Yeah.
then I don't know of the actual debt there. Um,
But that probably
I just want to see what the
that
actual
should
debt is.
help them a lot with the short term.
Yeah, because long-term debt's only because actual it says current portion of long-term debt is actually 15 million. So the actual debt that they'd have to make sure that they paid off is pretty low. Like
Yeah.
14 million of their debt is long-term operating leases.
Yeah.
And after they pay off this 15 million that's currently due, they only have 3.5 million.
Yeah, so that's the only hurdle they need to go past, and I think they will. I don't think they will have a problem with that actually.
Yeah, I mean, it just depends when the I just want to see if it says when the credit facility would be due then, because if they took out that 12 million, obviously, then they would have to see the credit facility matures on December 13th of 2024.
So this year then.
So they really can't take that money without taking it and putting it then they're going to have an issue with the credit facility if they
Yeah.
don't refinance it. So I could picture them either offering notes or
Yeah, I can, and they have bought back some shares as well, which is maybe a bit weird in the past year, right?
yeah, and another strange thing they did. So the company purchased I'm assuming it's 5 million shares. It says 5,000 shares. Maybe it is only 5,000. Um, I don't know where it would differentiate that. Of the company's common stock from Clear Lake Capital Partners for 8,850. This must be in millions.
Yeah.
And of which 4.4 million was paid in cash and the remainder was financed through unsecured promissory notes bearing 10% interest to Clarkdale. So they're doing all these little things to kind of stay afloat, but like they really need to start generating a little bit more in free cash flow because it's kind of rough. This
Yeah.
like they're not generating enough.
If you look at
And
the, I have a minus number. If you look at the 7-year average on free cash flow.
yeah, and it looks like yeah, that number is correct, but it looks like 2017, 2018 were particularly bad years.
Yeah.
Now, it could be that they have those again, obviously. So I'm not discounting the 7-year average.
Yeah.
But if you look at like a 3-year average, I get like almost 20 cents a share.
Yeah, I have higher there as well, but still though, none of the years after even like after 18 has been very good either. Maybe 2019 was their best year, but it's not like a exceptional performance here.
Right.
What did the stock price trade at in 2019? It was like $4, and then $11 in 2018.
Yeah. So I mean, it seems to appreciate up to about 5. And I actually got fair value for this at 550.
I would say I was gonna say around 5 as well, just now. Um, and I mean book value. I have book value at 6, a little bit more. So,
Yeah.
but I have them in a tracker. It's something. I think I put them because of the. Let me check what I wrote. But did you find why it's up 11% though?
No, let me see if there's any news or anything I can find. I mean, honestly, 11%. You know, I don't really take that as very.
No, it happens.
When was that 8K filing? Was that recent? No, that's a month old. So I'm checking Yahoo just to see if I can find anything that's talking about it.
Yeah.
It's all like the typical bullshit articles that's like Insider Monkey and Zax,
Yeah.
where it's like a robot saying like, "Should you buy this?" And it's like, "We've looked at all the numbers, and the numbers say."
You know that article that I told you about, the Amazon article on BNED on Thursday?
That was a warning to investors that it's going to go through. They just wanted to
they,
spit it out there. It
but
disappeared right away after you.
they have deleted it.
I know, that's what I'm saying. So they put it
Yeah.
out there. That was a flash to people. That was insider trading right there. That was them
Yeah.
letting us know that it's going to survive. That's how they do it. It's all subliminal.
Yeah, the small signs. You need to understand the small signs.
That is not investing advice.
Actually, good to say.
just to clear that up. But definitely bullish, super bullish.
Yeah.
Yeah, I don't find anything right now on S&D, so I think it's just
No.
stuff moving around.
Yeah.
You know, to be honest, I think it's more just because they're in um the energy sector. You know what I mean? Like energy's starting to outperform right now because of oil and everything's going up. What's
Yeah.
natural gas doing? Is it still super cheap? Yeah, it is still super cheap. It's $1.78 right now. It's so crazy to me.
But S&D is actually trading close to the top in the 52-week period here. So I was just curious to pull it up since the 11% up, but the fundamentals are okay. It needs more. The book value is pretty high compared to the share price, but they're gonna have to do something here to go somewhere, you know, because it looks like if you look at the chart, around $5 is what we saw, right?
Right.
And you have some spikes here and there, but I mean, it moves from around like 150 to 5, so it's not. It will need to drop a lot more for me to get interested if they simply can't improve their numbers here.
Yeah. No, I agree. So you know, I have these guys on deck because I do think they're interesting. You know, I think they're because of the fact that they're cyclical that you're going to kind of watch them bounce around. And you know, revenues are growing, but margins are down, so it kind of offsets itself. And they just need to have some positive quarters where they can, you know, really start to get a little bit ahead of the interest that they're paying and whatnot, as opposed to letting it kind of keep dragging the business down.
Yeah,
So I'm just going to keep them on deck for now. Like I said, I don't see. I'll you know, I'll be interested when their next 10Q comes out just to see if anything's actually changing on the inside. And obviously, I'll watch for insider, but
yeah.
I don't think there's anything too much else going on right now.
No, I see there's a firm called Man Group who owns them, so that's also bullish, I guess.
Super bullish.
Yeah. Once again, no investing advice.
Young Charles Edwin.
Yeah, I saw him too.
All these rich people got cool names.
Yeah, they got excellent names.
You know, you imagine you like walk in and you're like, yeah, I'm young Charles Edwin.
Nice to meet you. Imagine if he meets old Charles, then you're gonna have a
Oh, I'm
problem.
sure they probably dueled for that title.
Yeah. Yeah, you know this. No, I can't. I was going to say something, but I'm not going to say it. It's not fitting for the stream.
Well, we'll
There's
talk
a
after.
saying: you shouldn't teach your father how to do a certain thing.
Yeah, we'll talk after stream.
Yeah. All
Hey,
right.
I just gotta run to the bathroom. I'll be right back. All right.
All good. I'm gonna put the. We're gonna check Bury meanwhile. Just tell me when you're back.
Yeah. Hop.
We are back here. I saw we have a chat Dane. Garnard. Hey Garnard. Nice to see you coming back again to the stream. I think Garnard was he tuned in on Thursday on when I did a stream, and he's from Germany, Dane. Another one from Germany.
Does it say what time that chat was from?
No, I can't find anything. Do you have it?
No, mine doesn't say anything. So that's why I was wondering.
All right.
Oh well.
I think it's recent. He just said, "Hey," so hey, nice to see you.
Hello.
I think if I remember correctly, Garnard is a owner in Alto.
Yeah, you guys were talking about that on the last stream, right?
Yeah.
Did you want to move on to another company?
Yeah. But did you find any interesting tickers or?
Um, just stuff that I pulled up, which let me just peek it. Let me just peek at these real quick to see if it's worth delving into.
Yeah. Otherwise, we can move into KE, which is Kimball Electronics.
Oh, Kimball?
Yeah.
Let's
You
do
know them?
Kimball. I looked at them a long time ago. It's one of the first companies I bought, actually.
Okay.
What is it? What is their ticker?
KE?
Oh, they changed it. It used to be KBAL.
Oh, yeah.
Used to be K-Ball.
All right.
Or no, you know what? This must be a spinoff or something because Kimball, the one I was furniture. So this, but I wonder if this is somehow related to the other one.
All right. So,
This is electronics. So different company. Never mind.
yeah,
I've never
this
looked
is
at these guys.
electronics.
I'll add it to the database here.
I just saw them on one of my other screeners, not the Daily Movers or anything like that. This is from another screener. And I guess it was more the fact that they trade close to the 52-week low.
Okay.
Like straight off here, it doesn't look so attractive, but good revenue though, compared to the market cap and all that. Been buying
And
back
it's funny,
shares steadily.
yeah, I actually have my share count or my value calculator calculated 2141. So it's
Oh yeah,
trading at fair value according to me.
yeah. And I mean, if you look at book value, also it's spot on with the book value.
True.
What I don't like, if you look at the cash generation here, it's not doing really good.
It's definitely struggled the past 2 years. So
Yeah.
trying to figure out what's going on there. It looks like did they take a lot of debt on? Yeah, they did.
Yes, in the last 2 years they have, but it doesn't show up as levered in my sheet, so it's nothing too crazy. But they have taken debt on, and the short term now is more than they have in cash right now.
Yeah, mine does actually show up as levered. So
Okay. Oh, same here, but it doesn't issue shares.
mine does on a cash flow basis.
Okay.
But not that that really changes too much. But
No. No, but the cash flow is the problem here, right?
cash flow and also too, like whatever they're spending on capex is pretty high. So
Yeah.
um
But positive earnings in all my in all the years I have here, they have positive earnings.
yeah, the only thing that worries me about the earnings is when they take on that debt, what would their earnings be if they didn't have that debt? You know, they would have
Yeah,
probably been pretty negative. Because
the last two
that's one thing
years.
you see companies do all the time is they take on debt just to keep their earnings looking good,
Yeah,
and like, you know, that's slowly starting to sink the ship here.
yeah. But up until 22 though, it's like a steady, slow, steady growth. If you look at the history here, I think. So, you know,
True. Their margins
and
have always been
pandemic.
tight. Like gross margins only, I get 8%.
Yeah, same.
Yeah, what happened in 2022 that was so rough for these guys?
They had a good year in the pandemic, of course, but then it seems like it seems a bit messy after pandemic for these guys.
Yeah, and it looks like they have operations all over the world. They manufacture products for its customers and facilities located in the States, China, Mexico, Poland, Thailand, Vietnam. So
Yeah,
they're definitely worldwide.
I'm just gonna check the depth here. Where is it?
The chart's pretty bouncy.
Yeah, it was pretty bouncy. Also, they also have they have some they have like a China revolving credit facility, Netherlands revolving credit facility, and in all the countries that they operate in.
Gotcha.
But long term is due in 27 and beyond. So it's just you think maybe if they continue with this trend, they will take on more debt because they are struggling.
Yeah, I mean, I gotta read more before I say for sure that that's kind of what the company's thinking. I just want to go to their actual business website and see what they're saying, like if they have a presentation or anything about what's been going on, because it doesn't look all that great. What the heck is this? There we go. No, wrong one. Well, they got a YouTube video. Fancy.
I'm trying to find a YouTube video. Ah, here we go.
If you just go to their business site, they had something. I don't know what it is. I'm going right to a presentation.
Winning together. I like that.
I mean, they've been growing since the 2000s. A lot of facilities they're opening up all over the world.
Yeah.
And it looks like, the reason they're doing it is because each area kind of focuses in on, manufacturing for that area.
They're kind of all over the place though with their business, right?
Yeah, but I mean, you got to think if they're this big and they're kind of all over the place, that stuff's going to be jumping up and down.
Yeah.
And they're in. It says that they divide themselves into three sectors: automotive, medical, and industrial. So they
Yeah.
provide electronics for a lot of different things.
In like typically in a company like this, when they start to struggle, would you see they narrow down their focus?
Well,
You
it doesn't
can
seem like that's their strategy if they're expanding like they are.
no, it doesn't seem like that's on the plan at all. But if you drag some parallels to Alto, not to compare too much there, but they are also like delivering to a lot of different sectors and have seemed to now narrow down a bit and focus on like what's in front of them with the carbon capture program and stuff like that, and that's kind of what I wanted to see there, and what I think we saw a bit on the last call. So
Yeah. Um, their growth in some of these areas is really good. So if they can turn that into, like, it's talking their automotive industry's up 41%, their medical's up 25, industrial's up 33.
yeah.
They were, they have a lot of contracts with pretty large vendors and whatnot.
It
Although
says
this
like they
actual report doesn't say much.
It says on January 5th, 2024, we amended our short-term credit facility to provide additional domestic liquidity for investments needed to meet working capital and other operating needs. Increases borrowing limit to 100 million from 50 million. And they changed the
Yeah,
maturity to January, like they pushed it back a year to 25.
Gotcha. And it looks like I'm looking at their investing in growth. They just kind of show their capital allocation. And it looks like this last year they spent quite a bit in cap expense, but before that
Yeah,
each year they were spending a little bit each time in share repurchasing. So
yeah. If you go a bit more down, they have a own section there. Since October 2015, under the board authorized share repurchase program, a total of 88.8 million returned to share owners by repurchasing 5.8 million shares of common stock. 11.2 million remaining on the program for deployment. That's on page 25.
gotcha. Yeah, I mean, this is all interesting to some degree. I just wonder, like it's not cheap enough right now. So
No,
I don't know how much I want to delve into it just on the fact that don't get me wrong, I don't think they're in like a bad spot or anything like that. Like they seem fine.
but
They did take a lot of debt out to kind of
the
get,
issue the issue is we need a big drop here to be interested, right?
yeah, which, depending on how they run this thing, it might become that.
Yeah. You saw in the pandemic it was down to $10, which is almost half what it is today. I think that would be a good that would be a place where you would get much more interested here. Because I think, like you
Yeah,
said earlier, that like it's around fair value right now, right?
I mean, that's kind of what I get is it's around
Yeah,
fair value.
yeah,
Yeah, but and like I said, I always say this, but my value calculator is, it's very
yeah.
basic. It's not really taking into account all that much. But that's more
No,
just because I don't really care, like if it's trending somewhere around the valuation, I think, and then, the business isn't in like a nosedive, and then there's some kind of narrative around it. That's more what I'm interested in than I am just pure valuation.
yeah,
I mean, most people use honestly relative valuation anyway. So, I can sit here and try and get really picky with my numbers, but no one cares.
no, yeah. It's always a good point. No one cares, and it's true.
Well, that's why, like I said, it's I read some of these like discount cash flows people do, and they get down to like these like really nit gritty like looks at things, and I'm like, what are you doing?
Yeah, it's just
That's a lot of time spent with a lot of math, and in the end, it doesn't really matter.
they all want to come up with the model that will make them famous.
Well, don't get me wrong, all the models like make sense. They all have like good, logical, sense to them. But at the same time, it just doesn't really matter. You can't, there's so many variables that you have to just kind of like assume when you're putting into those models, anyways, to get numbers that like, if one of those numbers is off, then the whole thing that you calculated is wrong anyway. So who cares?
Yeah, which happen often, at least in our universe, that you get a bit surprised by. That's what creates the opportunities, you know.
Yeah, I mean, mine's pretty simple. How much, if you just take into account some of the assets at a huge discount, and kind of go around book value and whatnot to see what the equity's worth, then you calculate, what your cash flow from operations is. You can kind of argue what that would be for share price, and then depending on how levered it is, I discount for that. That's, I mean,
Yeah,
that's all it's to it. There's nothing
yeah,
more to it.
yeah, and we have seen that your calculator is actually uh, pretty good from what we have seen when we have done stuff together here.
Yeah, I mean,
But but but
I've honed it into where it is today, but
yeah,
I find the more and more I've played around with it to get it what I want it to do, the more accurate it's gotten. I tend to see that my valuation is, if it's not agreeing with the market, like I said, either there's some kind of really future growth priced in, which is why my calculation's low compared to that, or it's discounted and there's a reason, and that's where I get interested.
yeah. And just for if people are new here, we have said it before, but the valuation that we put in when we add notes and stuff is just rough. To have a reference point that will catch our attention if it goes around in that area or far away from it, you know. So it's
Right.
not. That's why we started to say like no one cares, because this is by far a exact number or anything like that.
Right. Yeah, I mean, I don't have too much to add. You know, it looks like most of the owners are small owners, even though it's a lot of like industry owners. So, and you know, there's obviously foreign risk. It's kind of all over the place. And do I think this is probably going to slowly grow over time? Yes,
Yeah.
but I don't think it's really um interesting in terms of the kind of thing I'm looking for.
No, I agree, and I think the drop that we are waiting for to get interested might not come here because it would be such a big drop.
Yeah, no, I think there would be something that struggles in the business, which you know, then it'll be interesting to me.
Yeah.
I don't get to look at the ones that are easy.
No. Well, a bit
It's not
slow
how it
today.
works
We
here.
we haven't found too many companies. You want to do one more or CHUY?
Yeah,
CHUY?
we could do one last one.
Yeah.
No, I mean, whatever. You know, I still. It's not that I don't find these interesting. It's just not right yet.
No, and it's always good to go through. Like you know, we add them to different places in our sheets. Like we have a system that notify us that we have gone through them in the past. So everything we go through or updates on is good. You know, just a step further.
Yeah, and you know, it's like a slow grind. You know, like
Yeah,
it's just kind of building out. You know, now I know what the hell Kimball Electrics on it or
yeah.
electronics is. Like I would have never known that
But
before.
it,
But
it
now,
had
you know, if I
some
hear the
like
name or anything like that,
no. But your conclusion, like we talked about it also, it had like a slow growth there, but it's just like a bit different than what we usually look for.
yeah,
So
I mean,
this is
I kind of started looking at things kind of how similar to like Peter Lynch like does it because Peter Lynch is always he's always said there's a few different kind of plays. There's like your new companies that are fast growers, which you know those are probably going to trade at high premiums, and then um you know you kind of ride those up until all of a sudden you either get you know you get that first bad news where all of a sudden the future projections all start to look crazy, you know.
yeah,
There's the stalwarts, which are like this one, where it's kind of like it's been around for a long time, just kind of cruising along. It's not really going to go up or down much. So those are slow ones if you want to hop into. You know, this doesn't pay a dividend or anything like that, which would maybe be
no,
more interesting is that kind of company.
yeah,
But and then there's like asset plays, which you know some of the stuff that you and I look into is definitely more asset plays.
yeah,
There's cyclicals, which, you know, so like I'm just saying, like I kind of classify these things into those different categories. So,
for sure. So this is a restaurant, I think.
oh, sorry, what was the ticker? I didn't get to put it up.
CHUY.
Okay.
Who's holding?
Tex-Mex, let's go right now.
um, just it trades at $32, so a bit steep in the actual price per share here, which is also well above book value, and they seem to have a good year this year, but I think and they do generate both operating and free cash flow here, but I think it needs more in terms of those things. Bit up in revenue. Do you also get a share buyback in since the pandemic?
Yes, I do. I do get a share buyback.
Yeah,
To be
and mine
honest,
show up as
their
safe
numbers
here.
are pretty impressive though.
What do you have?
For what?
Like the free cash flow, for example.
Free cash flow per share, I get like this year is $1.18, but on
Oh yeah,
average
we
I get
have the
about 90
same.
cents.
Yeah,
So, I mean that's pretty good for free cash flow.
yeah, and no dividend either. is yours safe?
Yes, it is.
Yeah. So they have some cash, and there's no debt here. Where there is small debt, but there's nothing to worry about. And I assume a lot is also leases, right?
Yeah, I would assume probably almost all of it is.
Yeah.
I get around like, if I was just to put a little bit of a growth multiplier on this, I get around just shy of $30 would be reasonable to me, like $28.
Yeah.
So
I don't disagree with that. And also, if you look at the, the last 3 years has been actually, if you look at the operating cash flow, they've been pretty stable since 2015, and then this year 23 has been a bump up for them.
yeah, I mean, and they've traded at quite a bit higher than that, which is
Yeah. But not too long ago, it was down to like $18, which would be much more interesting here.
Oh, I thought at first when I read it, I thought they said they had 16 restaurants. It's across 16 states. Okay, that makes a huge difference. I've never been here, so I want to pull up the actual business just so I can
They
look at it.
have 96 restaurants in 17
Okay,
states in my description.
all right, that makes more sense anyways,
Yeah.
because anybody in the chat, has anybody been here? Anybody know what this,
We have had some people, but Garnard, are you still here? Feel free to ask us some questions.
Yeah, I saw at one point we had a few people watching, so.
Yeah. The schedule is a bit different today, so. Interesting side note though, almost 9% short interest here.
Yeah, I wonder, let me see they got a 2023 presentation. Let's see what's going on here.
I'm getting hungry. Have you seen on their website?
Yeah, I'm trying not to think about it. I mean, this is a good one actually for you where like, I was just talking about relative valuation. There's a lot of restaurants that you can compare this to so we could get an idea of where they should land. They pretty much are showing everything them versus their peers, which I kind of like.
Oh yeah. You're talking about the presentation now, right?
Yeah. And it's kind of funny if you look at the different like buildings they're in, like they look very different from one to another.
Yeah. Oh,
But yeah, it looks like
we
it's kind
have
of all
Josh.
around the southeast.
Josh has tuned in, Dane. He's saying, "Hey guys, just saying hi. I missed the whole beginning, so I have to watch back." All good, Josh. Nice to
Josh.
see you. You were also here on Thursday, so cool to see that you are tuning in. We appreciate that.
Yeah, you haven't. We've just been slowly going through stuff. We haven't found anything crazy, but interesting things nonetheless. I want to go get Mexican now that I'm seeing this.
Yeah.
This looks delicious.
And you have not been to these?
No, because I'm up north compared to these. I mean, there
Oh, yeah, I
is
see them
some. It
here.
look like. Where's that presentation? Oh, I'm on the presentation. I just gotta go back.
Like southeast.
Closest to me is maybe Ohio.
Yeah.
My brother lives in Ohio, so maybe I'll visit him out there sometime and see what.
Yeah, you can take him
Yeah,
out
it
for
looks like
some.
these are real big in Texas though. So
Yeah, that's where they are based.
Texas, Florida, and it looks like Tennessee has a couple as well.
Yeah.
But no, so I've never been, but I mean, this is like one of my favorite kinds of food, so I'm sure I would love it.
Yeah.
It's kind of hard when you take good Tex-Mex food and like that stuff's all delicious.
Yeah, it is easy to eat. They say 6 to 8 expected restaurant openings in 24.
No, it's good. I mean, they're continuing to expand.
Yeah.
Actually, I want to look at their margins here and see how they've done over time. Like, are these things getting better or like EBITDA margin's been pretty good. Net income. I mean, everything looks like it's been decent the past few years. Like, it looks like they're doing all right.
Yeah.
Did you look? Is it actually debt or is it all just like operating lease?
I didn't even look at it because it's I didn't consider it like a big issue here, but
Yeah, it's not. I'm just curious. Yeah, it's all
yeah.
operating leases.
Yeah.
They literally don't have any actual debt.
No. So that's not a problem at all. And
Well, actually,
still
it
they
does
have
say
six.
long-term debt here. Let me just see what this says. They have a credit facility, but I don't know if they even have anything out on it. If they do, it's small.
And they have actually like excess cash. In my sheet says 63 million, and on the balance sheet is like
Yeah, no borrowing.
almost 70 million on the books right in September. It's a bit old though. These reports like from September.
I don't. I think this is trading. Honestly, I would say because they have no debt and and they're slowly expanding and their margins are decent. They generate earnings every year. I would say that this is pretty fairly valued. Even like, don't get me wrong, I think $32 is probably like a premium, and it'll probably go higher than that too. But this is going to trade at a premium. I mean, this is a decent business.
Yeah. Um,
Um,
what do you think though the shorts are seeing here? Because 9% is not a lot, but it's also not nothing.
well, I would argue that the shorts probably are just thinking when it gets up. Like, if think about it, I mean, if you look at the chart here, when this gets up to like, I don't know, upper 40s, mid 40s, or even after COVID, it jumped all the way up to like 50. I mean, that's probably
Yeah.
just the COVID bounce that everybody got.
Yeah.
But like, 40 bucks is a pretty high premium. So if you short it around 40,
Yeah.
um,
You
I don't
jump
think that's
out.
that crazy.
No.
I get it. If I give this as good a rating as I can, which is putting the 52-week high and everything in there, I get 38.14.
Yeah.
So it's a pretty
Yeah.
strong.
No. I agree. Like from 27 to 30 is what I see for like fair valuation here. Um, and I like the positive cash generation, of course. And it seems like it doesn't seem to grow a lot in terms of that though. But for these numbers to be very attractive, we need a drop in the actual share price here, right?
Yeah, I would agree. I mean, I still think like around like 28 bucks. Like I said, it's interesting.
Yeah. I see Josh. He's saying I haven't been, but those pictures look great. This is the investor relation page. Yeah,
Yeah,
we
right.
agree with that. They even
I
had
know.
like a
About to go.
cool.
I still got to eat breakfast. I'm gonna make some. What is it? Rancheros or whatever. Havas Rancheros or whatever is the
Yeah,
Mexican one. That stuff's so good.
I saw. Did you see the names also? They have a burrito called "Big as Your Face" burrito. That's
There
the
you
one
go.
I'm getting.
No, I mean, and you think about it too, like this food is extremely successful and it's usually pretty low cost type stuff because I mean, you look at like
Yeah,
Chipotle or something for that matter, like, they've done super well. Now this is a more of a real restaurant sit down. It's not like a counter fast. I don't know what do they call it? It's like fast dining or something is like that is the name of like Chipotle in them, like where it's more like it's not a fast food restaurant, but it's more like a casual restaurant
Yeah.
essentially.
Yeah.
But but yeah, I mean the fact that there's no debt and it looks like they're doing share buybacks.
Yeah, they have capex is a little bit up in the last year, and a lot up since the pandemic, but um, that could also be just a good sign for the future.
Yeah, well, I wonder if CapEx was just down because obviously you're not spending as much on everything during those time periods. Because if you look at it, I
Yeah,
mean, historically, CapEx was at 50 million, 45 million.
yeah,
Um,
you're right.
and now we're back at 40 million. If they're expanding too, they're
Yeah,
spending on new stores. And granted, I know a lot of it's operating leases, so it's not like you're actually buying the property, but you still have to set everything up and train people. I don't know how much I don't know if training and all that goes into CapEx, but you know what I mean.
yeah, yeah.
You
It's
got to
actually a
ship
good
it,
point
all
because
that stuff.
they a lot of the numbers are similar now to just like a year before the pandemic, so they have maybe recovered up until this point, and who knows. Um, so they were planning for like a 10% growth rate in the long term.
Mhm.
So
Yeah, and I think that's reasonable. I think this one's interesting on the fact that, like I said, if this gets cheap, I think it's a pretty good business. I think management's done a pretty good job.
yeah,
Yeah, I'm adding them on deck for me.
yeah.
I don't know if something. It's not like that. Like I'm going to buy them anytime soon, but they're definitely
No,
interesting. I like
you.
them. I like the business.
But that's why you try track things. Like you notice, this is good. The cash flow generation is good, but so you're waiting for that price drop, and if it
Right.
comes, you're ready. And I mean, market cap
All
of
right, man.
561. So there are some
That's
downside
right in my
here.
wheelhouse.
Yeah, 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 of course.
561. I mean, that's the other thing I like about like I feel like around like 500 million is where you start to see some of the bigger institutional buyers can start to look at these things.
Yeah. Did we check out
You
who
know what I mean?
owns it?
I don't know if I checked on this one.
First Eagle. Isn't that First Eagle? Have you heard about them? Oh, they own a lot, so I
First
don't
Eagle, where
care.
do you see that?
They are like in the
Oh, I see it
position.
down here.
Yeah, but they own a lot, so
I was gonna say it's 130th position for them then.
yeah,
But I mean, they have decent institutional ownership all over the place. You know what I mean? Like that's not a
yeah.
bad sign to me.
No,
Yeah, it just means everyone's kind of got a little piece of it, and they kind of like that little chunk that they got. But my point being is that if they're buying in like BlackRock and some of them have like big positions in this, like it's not a bad thing.
no. New York State Teachers Retirement System is also in there.
Why not? They probably how many? I was gonna say how many holdings do they have?
I didn't check.
I would imagine that it's totally spread out across everything. All right. All right. Well, I think I'm gonna call it there, man.
Yeah, all good. We went through the tickers I had at least. Maybe you. I know you had a few, but it was a bit tough to find like super interesting tickers this week, I think, and we have of course just waited a bit on BNED. On my stream on Thursday also, I didn't really find too many things, but it's nice still to go through it and um, just keep yourself updated. I think that's a big part of. We try of course to make the streams like we can add some value and maybe sometimes we don't add to so much to our own tracker sheets and watch lists and all that stuff, but still, it's just to get through them, I think.
Yeah, I mean, the only ones I didn't go through that I had pulled up is I had Rackspace pulled up, which I've pulled them up before, so they're in a rough spot. They have a long ways to go. So that's why I was
Yeah,
like, yeah, we won't go through them today.
yeah,
And then I found one, it was a China-based one. I didn't realize that when I first pulled it up. So honestly, I don't know how much I trust any of these numbers because the numbers look really wild.
yeah.
And then the last one actually that is interests me down here is Trinseo, which I know we've looked at Trinseo before.
Oh yeah, yeah,
So I'll probably at some point today go through Trinseo just to get caught up on them because they're trading at I think of pretty much at lows, like real low.
yeah. I'm just gonna check if there's some new before we stop here. If there's some new comments on Alto, because I saw Justin had a tweet yesterday.
Gotcha.
I don't see anything on the article, but Justin tweeted something about the ethanol thing that has uh, here huge win for ethanol producers. And he's referring to someone who's saying White House initially weighed tying all three smart AG practices together in a none or all approach to qualify for SAF tax credit, but backed off the idea, sources tell me. So I just saw that update from him. I think this was yesterday.
But he said they're not doing that now.
Yes, they backed off. But it's not confirmed. He says just like sources tell me, and this is not Justin. He's just retweeting some guy. But you know, Justin, he has a good overview of everything that he's involved in. So I'm sure this guy is legit.
Yeah. Oh, I'm sure. All right.
So
Well,
he look at that as a huge win for ethanol producers. So still, it's like Alto. It's a bit slow, but now I'm excited for Alto as well.
yeah, no, I honestly, I will focus much more on some of these other companies once I get this through this Wednesday.
Yeah,
It's it's hard not during the week to not be like annoyingly trying to check for news and whatnot.
yeah,
So, which like I said, even if I do get the news, good or bad, it's not like I'm going to react to it really all that quick. It's more just I'm just curious. It's been such a long ride here. So,
yeah. Yeah, I don't think it's
all right,
so
man.
often that you get a setup like BNED has been now actually since we got involved. There's been like a lot of things like forth and back, and then in the end now we are just waiting for the depth issue. So
Well, and even with BNED too, it's rare I can get a position size of this a large enough of this size because I do slowly kind of trunch into things. So a
yeah,
lot of times I get in, but I only get so much in just because of you know something starts to appreciate or it turns around, and at that point, you know, I'm not going to throw too much. I'll put a little bit as things start to go up. I have been working on that, you know, kind of working on the upside of things, especially if there's like some kind of different news or whatnot. But other than that, you know, it's me just kind of trunching in, and whatever I get in, and then I'm out.
yeah. All right. You next week will be a few changes. I think if we manage to get it done, I might be the one who streams on Tuesday, and Dane maybe will do his on Thursday. And then on Saturday, we are a bit unsure yet if we can make something happening on Saturday. But as always, we'll just keep you guys updated on our Twitter or X. So if you don't follow us there, and we will post the same day probably is when we post about changes in the schedule and stuff like that. So yeah, what do you think, Dane?
Yeah, just
Will
follow
you
us
be
on
able
Twitter if
to?
you want to follow
Yeah,
or X.
you think you will be able to stream on Thursday?
Well, and actually, it depends. I'm thinking possibly maybe I'll do Wednesday, especially if there's
Oh yeah,
news.
yeah.
So we'll update you guys next week as things go on. So sorry, I know it's kind of tough when we don't have when we're not able to keep like a super strict schedule, but you know, it's just the way some things work out.
Yeah,
But
yeah.
yeah,
I
so maybe
think
I'll do
this.
Wednesday, but either way, I
Yeah.
can do Thursday if you're gonna take Tuesday. That's fine with me.
No, but Wednesday sounds like more natural when we are waiting for the news.
Yeah, so we can go over stuff then. So
Yeah,
we'll let you guys know.
yeah. So yeah, thanks everyone who was tuning in, and thanks Garnard and Josh for using the chat. We really appreciate everyone who gets involved here. So yeah, we need to wait a few more days then, and I guess I will see you guys on Tuesday then, and Dane will see you on Wednesday or Thursday. So that's going to be good. Exciting times, very near now. So I'm still going to play my Sum 41 song. Do you have a waiting song, Dane?
I'm sure I could find something. I nothing off the top of my head, but I'm sure
Yeah.
there's definitely songs.
Give us some
Hopefully, I don't
song.
have to play a waiting song.
Yeah, that's true. Everyone, we need some song suggestions in the chat. Some waiting songs suggestions, I think.
All right, everybody, have a good one.
All right.
Have a
See
nice
ya.
weekend. See you guys.